Hello everyone, it is Sterling here from Day Trading Forex Live. What we are doing today is this is a month in review for the month of February. This is our 10th review. I started this back in May of 2015, and at the suggestion of a member, I started it and I thought it was a good idea, so I've continued it all the way to February. Probably will still continue doing these as well. This is now the 10th consecutive profitable month that we've had in these month-end reviews. Maybe at some point we'll have a losing month. It's possible. Any trader that says that's not possible is being, at the very least, a little disingenuous or maybe a little ignorant to reality. But the fact is, maybe that'll come at some point. We haven't had the greatest months during January and February. January and February were probably some of our toughest months that we've had over the course of the last 10 months of doing these videos, without a doubt. And anyways, just to go into these videos, one of the things that we've seen is a pretty big reduction in the amount of trades. Not only, as I said last month, we saw not only about a 30 to 40% reduction in the amount of trades on just the euro dollar and the pound dollar, that is. But we also had a probably 15 to 20% reduction in our win-loss ratio. We average in the high 60% win-loss ratio, and that's over a very large sample size. Now, with this strategy, because we have a higher reward to risk ratio, we can be extremely profitable at 50%. So when we're running on average at, an average in the high 60s, we're running extremely profitable months. Not only have we seen a reduction in trade quantity, but also the actual win-loss ratios, and it just, to me, illustrates the robustness of the strategy, because even during a time where we're seeing a tougher market in relation to our strategy, we're still turning consistently profitable months, although it has been a grind, without a doubt. It has been a definite grind, and it just, again, it illustrates the important aspect of discipline and patience, sticking to a strategy, because that's what leads you through a month without taking a huge drawdown. This month, even on a tough month, our worst drawdown during the entire month was 4%. So not a huge drawdown by any means. And we'll go through our trades. Before we do that, though, real quick, one of the things I get asked about is those that have full-time jobs, those that can't be there for major chunks of either the European session or the London session, or maybe even both. What a lot of people don't know, because we don't really advertise it very much, it's only sold to members and only talked about in the members area, really, in a big way, that is. We have something we call DTFL Pro, and DTFL Pro is something I addressed in the previous month's video, the January review. But what this does, this trades the strategy from the pre-selected points. So as I talked about at the end of the very last video, we have pre-selected points, which you'll see these more throughout this video. But what I did is, let's say you were trading the January 29th session and you were setting up your levels for the pound. What you would do is you'd simply put in your, what we term as PP lines on this, and you would input your levels. So you would put your first upper point, you see this point right here, 43.97, your upper point, you would put that in the corresponding first upper line. And then for your lower levels, 42.85 as well as 42.30. So you put those points in place, you get rid of your other ones, and then you click save. And then what you have is your first upper and your first lower point. You see how that transforms. And then what it would do is it would trade the actual confirmation entry from those listed levels. So it requires inputting the levels that are pre-selected each night in the daily market preview. But then from there, the software trades the entry from those levels. It manages the trade. It also exits the trade. So just a little bit about that for those of you that have had questions in regards to trading the strategy there. So anyways, let's go ahead and work through our trades. This is based on a mechanical application of the rule set. We'll walk through all of those setups. And if you want to learn more about DTFL Pro, you can go to YouTube and check out DTFL Pro in the search box, and you'll find information about that. Or for those of you that are members, feel free to contact Rick in regards to any questions with DTFL Pro. All right, first trade of the month. First trade of the month came on the 5th here, and there was two trade setups. The first was a euro long, the second was a pound long. So just to establish this, on the euro, the level was 11 1133 as we see here, one spot 1133. That was our level. And then on the pound, the level that we took a trade from was one spot 4538. So those are the two levels that we had an actual valid setup from, which we'll cover here right now. So the first level that we had, again, was that euro long from 1133. Now I'm going to walk through a few other aspects with this trade as well, because there was some differences between results on this trade, because it was, to me, this illustrates the importance of broker having a tight spread. For those of you, well, I'll say in all fairness, nobody in the room got hit. I didn't see one person in the room say they were hit on the entry. And this kind of comes into the bid and ask discussion we've had lately with the members. But anyways, the entry was after the stop run. We pulled back for the confirmation. After we had after we continued sideways, the result on this one for me was a break-even trade. For those of you that held and continued to ride up, you had maybe a roughly 1.5% profit. If you did get tagged on a full loss at that point, then obviously, and that would be for anybody that had a wider spread. This is, again, a good example of why tighter spreads are so important, especially on those rare occasions where it actually does matter, can make the difference. That's what made this a break-even trade based on the broker standard that we use here. So start off the month with a break-even trade, and we continue over to the pound. This was, again, another setup on the same day from 45.38. So if we come down here, we have a situation where we have a stop run of this level, and we come into 45.38. We get a stop run, we get a confirmation back up. We provide the pullback for the entry. In this setup right here, this setup pulls back enough to close out the initial long. Probably stopped us out by a few tenths of a pip, unfortunately. And that means that we started off the month with a 2% loss on that trade, sitting at 2% after a break even and a 2% loss. Started off the month a little rough, because not only did we see a major reduction, as I talked about earlier, in the amount of trades, but we also had started off with two losing trades on the pound. The next trade was a pound short on the 10th. This was we skipped over the weekend here. And we go into the 10th, so we'll drag this over. And on the 10th, 45.06 was the level. That was our upper point. Again, 45.06. So we'll drag this back out. And 45.06 right here produced a valid stop run, a valid confirmation down. Now, a little bit of a unique situation here, because the entry would have happened after the news. So we still had a valid candle count running. We still had a valid situation where we had a stop run, a confirmation. So candle 1, candle 2, 3, 4 was the news, which meant the entry could have been on the 5th candle here. With the entry on the 5th candle, that would have resulted in later a full loss as it pushes up, taking us to our max drawdown for the month of 4%. And then things look a little bit better on the next trade. This is the next day on the 11th. What we had is we had a nice full profit trade here. And so basically the level that we were working from on the 11th was 44.57. So we come in here, a backside off this level, one spot 44.57 there. And we drag this point down to 57. And we come into the backside, we create the stop run, we get the confirmation down, and it pulled up, came probably within about 7-8 pips of a stop, pushed down for a full take profit prior to the start of the New York session, resulted in a full 4% take profit, therefore taking us to break even on the month. And that, my friends, is the beauty of a high reward to risk strategy from a day trading perspective, because two losing trades gets erased immediately with one profitable trade. So anyways, next trade was a valid trade, and it was a break-even trade. It was a pound short. And this one was we again skip over the weekend. It was a pound short from 44.52. So here's the daily market preview for the 15th. The level was, again, one spot 44.52. If you're wondering why I don't talk about the other levels, it's because if there was not a valid trade set up from it, I don't cover it. And for those of you that are members, you can go back and cross-check all that, verify that there was not a valid trade set up from it, as we talk about in every following day's preview. So again, 44.52, we come into 44.52 on the 15th, and what we had was a valid backside option. So you had a valid backside option here. You broke 44.52, and you come into the backside, create the stop run, create the confirmation down, provides the pullback for the entry. this right here would have hit a full, or would have hit our break-even stop. So we would have been up roughly, let's get an exact measurement here. That was 25 pips down, so we would have taken the entry 20 pips from the high. You'd have been up roughly 30 or so pips, and therefore the break-even stop would have been hit as you pulled back here, keeping us at break-even on the month. Go over to the next trade. Next trade, pound long, resulted in a 2% loss. This is a good example of how, you know, when we're talking about a mechanical criteria, when we're looking at a level being created, 44.55 was the level, by the way. And this is fully discussed in the preview for those that want to go back and check it out. But I had it listed in red, 44.55. And what I said over here was one spot 44.55 is not a valid level yet. Please refer to the video for exactly what is required to be a valid level. And so what this did, our strategy being mechanical, sometimes a few tenths of a pip will make the difference between a valid trade or not. A lot of you did not take this trade and therefore would not have a 2% loss on this trade. I could have said, well, it just barely hit the minimum criteria. It's not a valid trade and therefore we don't count it. This hit the valid criteria by a few tenths of a pip, even though, again, I know a lot of you didn't take it. And so to be true to the results, I'm counting that as a full 2% loss, taking us down 2% on the month, again, from break even down to 2% negative on the month. And then we continue over. A lot of break even trades this month, and that's what the next one was. It was a pound long on the 18th. So pound long on the 18th here, and the level that we were trading from on the 18th was 44.32. We'll drag that over here. Again, the upper level, 44.32. And it was a pound long from 44.32, would have been a backside situation, or backside trade setup in this situation. So we come into 44.32. I believe this looks like it was a room trade as well, trade that we had taken in the room. I'd have to go back and double check. Actually, let me see here real quick. Yeah, it was on a Thursday. That's why it looked familiar. So anyways, we got the confirmation up. We had enough pullback on the following candle for the entry, and the close of this trade at 5 o'clock would have been right around break even, give or take a few pips, keeping us at negative 2% on the month. Next trade, Euro long, 19th, the following day. This was a very nice setup. This is what I love to see in and around news. This level here, 1070, I believe it was 1075 here. Let me go back and check this. Yep, 1075. So here was our lower level on the euro, lower level, one spot 1075, and we get a valid break of that with the 8:30 news. 8:45 confirms up. It looked very unlikely that we were going to get the pullback at that time, but we got the pullback, and I love stop runs where the news creates the actual stop run, because you imagine this was positive US data that came out at 8:30. Therefore, the euro spiked down. Everybody's chasing the euro down because of the positive data. It's breaking lows. It's breaking major lows. They're chasing this thing to the downside, and then boom, the price snaps back to the upside, creates the confirmation. At this point, the biggest issue that we often have is we won't get the pullback, and the pullback is what gives us our proper reward to risk ratio. This one, however, creates the pullback, hits our mechanical entry point, runs off for a full take profit, takes us from negative 2% up to plus 2% on the month. We get knocked down to break even on the next trade, but then have a nice winner after that. And that next trade comes on the 22nd. Both of the next two trades come on the 22nd on the pound. So two really nice setups here. What we had initially on the loss, again, a nice setup, even though it is a loss. 41.67 on the 22nd was again the level, so we'll take that over here. Two trades on the pound. 41.67, that was our final overall lower point. Again, 41.67. And then a level that was outside the ADR, which is why it was not listed, was 40.91. That was another level. It was beyond the ADR, and that's why it wouldn't have been listed in the daily market preview. But it was an absolutely huge, really indisputable level from that perspective. So we'll touch on that a little bit as well. So 41.67. We came into that point. I know a lot of you guys did also open and close below this with two consecutive candles. If that's the case, you wouldn't have had this trade. But for me, and the official broker that we use for keeping count, which is Global Prime, and I'll refer to Global Prime below this video. I did a video on them as well. But anyways, Got the valid confirmation, obviously would have resulted in a loss, taking us to negative 2% on the month. Next trade, 40.91. This is a huge level, absolutely huge level, and well beyond the ADR, which is why it would not have been listed. We get a valid stop run up on this level here from 91 just by a few tenths of a pip, and we get the confirmation. Next couple candles pull back to provide a valid or a deep enough pullback to hit the mechanical entry point. The trade runs off for a full take profit, taking us to 4% on the month. We continue over to the next trade. Next trade was another pound long, another winning trade here. Full take profit on the 23rd, the very next day. This was a long from 40.71, so just to show you the daily market preview from that day. What we have is a lower level. We have one spot 40.71, valid lower listed level. So we come into one spot 40.71. I think I said 51. 40.71, sorry. You know, admittedly, I was not a huge fan of this stop run. I really wasn't. It was just really kind of mediocre. The candles looked kind of mediocre. But as I always say, and as I talked about in the room, because this was another room trade, this is a trade we were taking during the room. It was the 23rd, happened to fall on a Tuesday. That's when we're in the room. We're taking the trade live. And you guys can go back through that video, listen to what I was saying at the time of the setup. What we had and what this really illustrates is that, and what makes this strategy, for those of you that are still learning to trade, for those of you that may not be DTFL members, what should be appealing to you is the fact that the entry is mechanical. Therefore, it is either a valid entry or it's not. There is no ifs, ands, or buts about it. It's either valid or it's not. So when it comes to actually learning a strategy, you can't teach discretion. I cannot teach you a gut feel. I can't do that. The only thing that can do that is years of watching charts. What I can teach you is I can teach you a mechanical rule set that can be applied to the charts. And that's what this was. It hit the mechanical criteria for a confirmation, a valid stop running confirmation. It hit the mechanical criteria for the entry on the pullback, and it ran off for a full 4% take profit, taking us from up 4% on the month to now up a total of 8% on the month. And we go over to the next trade. This was the final trade of the month. It was a euro long, and unfortunately took a loss on this, which took us to our month-end total of plus 6%. So what we have is, again, a euro long from the level of 09.59. So again, 09.59, which would be right here. And just to drag over the daily market preview from that day, the 26th. Here was the lower level, one spot 09.59, valid listed point, listed hours before the market began, as the levels that are, or any other level in the daily market preview. We come into one spot 09.59, stop run confirmation. Nothing wrong with that setup at all. I like the setup, perfectly valid setup, results in a 2% loss. We end the month with a plus 6% profit at the end of that trade, which takes us to a month-end profit of, again, plus 6% on that trade. So to finish up with a recap to the video, what we ended up with here ultimately on a 6% gain. Remember, at the end of last month, we were sitting on a 195% compounded gain. Again, I'd encourage you to go back through the videos, verify each individual month, especially if you are members and you have the desire to do that. You have access to the daily market previews where you can do that. And then this month with a 6% gain, that takes it to from 195% compounded gain, again compounding on the previous gain, brings it to a 212% compounded gain, and all off 2% risk during that 10-month period. If nothing else, hopefully January and February illustrate that even during a tough time, if you're dealing with a strategy that's robust and is able to deal with a tough market, you should not have massive drawdowns. You shouldn't have massive drawdowns for a few reasons. One is obviously the strategy. Two is with this strategy specifically, it is the reward to risk ratio, in my opinion, that has a huge part to play in that. But also, something that's just very simple, and that is, what are you risking per trade? If you're risking 10% per trade, you're asking for trouble. You're asking for big trouble. So it just illustrates the power of consistency and consistent compounding on a gain. That's what ultimately creates long-term profitability and hopefully what these videos illustrate. So if you're looking to learn a mechanical strategy that you actually can learn, that doesn't require discretionary gut feel in regards to an entry, and you want daily support and a large members area to support you as well, in addition to support from member support from me as well, access to a live room twice a week that is recorded, members forum, as well as a 10-hour video course that covers every aspect of the confirmation entry and the bank trading strategy in general, then feel free to check out our bank trading course under the Forex course tab, which will be linked somewhere on this page. I will see you all back for the next video. Until then, happy trading.